Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 190 on 8th of March 2022. The markets again opened with a gap down, broke the lower lows from previous days. But then towards the end of the session, there was a sharp pullback, mainly on the back of Dow futures pulling back and going into the green. The situation in Ukraine has not improved from our perspective. Crude is still hovering around 125, but other commodities have started to break out now. Now nickel moved up like 60%. I mean, can you imagine a important commodity like nickel going up 60% in a day? And zinc has moved up another 12%. Copper is moving up. So I think these are all signs that the markets are actually broken. And no amount of short selling or selling is able to find balance to the buyers, and maybe it is a short squeeze that has started to happen in several pockets of the market. And if this now percolates to other commodities, and we've seen this in food items as well, wheat, corn, all these futures have been rising dramatically. So it really it fails to me to see how this gets resolved in a very short period of time, because these changes have lasting impact in terms of inflation and change of prices of various end use of these products. Anyhow, coming back to the market, so a good day from markets perspective in terms of a bounce. Nifty closed plus 1%. After being down almost 1%, and real estate, IT, PSU banks, pharma, they were all up. Notably, when the market was down in the morning, IT and pharma were still hovering around flat or green region, so they have been the ones where defensive money is going through. Metals took some profit booking, but more or less all stocks that had been battered in the last couple of days made some recovery today. Overall, in the last 1 week, IT is the only space which has still been plus 3.6% over a week and over a month. Rest all sectors have been red, except metals, which have also done well over a week, month and 3 months. In terms of the weekend investing small cases, Mi 25 and Mi 35, which are small cap in nature, did very well today, about 2% up. NNF 10, CNX 200, both on large cap basis, also were up more than 1%. ATH was down 0.5%, and EverGreen was flattish, with gold not moving up in terms of gold Bs today. But it is remarkable that EverGreen has not fallen this week. In the last month, only minus 1.2%, and then in the last 3 months, only 2.3%. Overall, still plus 35% for the financial year. This is probably coming out to be the best hedged product that is available out there. And I am reasonably happy with the performance on EverGreen, and so have been the users who have been showering testimonials on Twitter for this today. In terms of the mid and small cap index, they were also up by almost 1%. Small cap 250 was up 1.3%, and Nifty Next 50 at 1.5%. So all in all, a good day for now. Whether this is a dead cat bounce or is it a stable U-turn, that only cues from overseas will be able to determine. In terms of top gainers, responsive industries, Gujarat Ambuja Export, up 12% each. IGL, Indian Bank and Lemon Tree Hotels up 7 to 9%. And in the losers, JK Cement has been losing every day, minus 6%. Adani Total Gas, after a while, has started losing the ground, minus 4.9%. Hindalco, profit booking after a huge run-up earlier, minus 4%. JSW Energy also has been very stable, but and ONGC both down 4 to 5% each. Some insights from the day. So US money supply has been going bonkers in the last 2 years. Imagine 41% is the base money, which is the amount of money that has changed. If there were $100 bills earlier, now there are 140. So obviously when the base money equation changes, everything gets inflated because the value per unit of money is going down. So this is still going up despite whatever we are hearing that there may be taper and so on and so forth, but this is still going up. So inflation concerns will remain center stage in times to come. We can see that what this is doing to commodities: heating oil, wheat, crude, natural gas, Brent crude, aluminium, coffee, gasoline, corn, cotton, lumber. I mean, just see the percentage gains over the last 1 year. This is unreal actually, but it is actually happening. So, I mean, we have to take cognizance that the world markets are getting broken, and this will cause, disruptions in some industries or the other from time to time, because this cannot be absorbed the way it is without disruption. So in terms of stock markets, I mean, input costs for so many of the producers have gone up dramatically, and I doubt if they can really pass on and maintain their margins on this. Some love for Mi EverGreen, as I mentioned, thanks to Ankit and Mr. Prakash, who have been Mi EverGreen users. And to my surprise also, EverGreen has done fantastically well, where the capital has been preserved despite these market moves, because we have hedged it with gold. And my thesis on gold, which I have been constantly broadcasting for last 5 years, has helped a lot more people. I get a lot more testimonials on that. So even if you have not allocated so far, you can still allocate. There is no short-term move here to be seen, but over a longer period, you need hedges in your portfolio to stay sane and safe. For Weekend Investing Evergreen, if you wish to subscribe and if you have been a user in any of these years, we have a special Evergreen 20 use code that gives you some discount on it. Let's see what else we have in terms of okay, so this was the end of today's Weekend Investing Daily Bytes. I hope you are keeping your mind and your thought process along with your process intact, and you're doing what you're supposed to do regardless of what the market may be making you fearful of. So keep the fear away. Ups and downs in the markets are a part of the market, and we have to internalize these changes and absorb them. And once we are able to go through these processes without being biased, we can come out winners on the other side. Thanks so much. Bye.